This is going to be an extremely disturbing video to some who don't know what's really going on behind the scenes of the silver market. This truth they do not want told, but I feel it's my duty as a silver stacker to relay this information to you and to have this discussion to truly analyze and prepare for what lies ahead. So I'm about to reveal an article from Ted Butler titled Eyes Wide Shut. Ladies and gentlemen, hope you enjoy the video. Hey, what's up, stackers? Thanks for being here. This is Silver Slayer. First and foremost, I'm doing a giveaway. If you want a chance to win some silver, click the link in the description or the pinned comment. May the luckiest stacker win. Most importantly, I want to talk about this article that I just found, posted from Ted Butler on June 9th. Ted Butler is extremely respected in the world of precious metals, in the investing world, period. I've covered tons of his articles. He's been in this for a long time and he knows what he's talking about. This video is heavy. We're going to be talking about silver price manipulation in a light that I've never shown before, and I think you're going to enjoy this and find it extremely educational. So let's jump into it. Paul Krugman, the economist whose work we either love or hate, had a compelling editorial this week in the New York Times titled From the Big Short to the Big Scam, in which he compared the real estate bubble of 2006 and the subsequent crash to crypto today. Because this article was behind a subscription paywall, I'll not link it here. And my purpose today is not to agree nor disagree with that connection of the real estate bubble to cryptos, but to bring out the most astute observation he made. So he's going to be comparing that article or that editorial he read, but to silver. Please stay along because it's in the middle to the end of this article where everything really starts to come together. This is just a little bit of context. Krugman made the compelling case that would enable a relative handful of market participants to recognize and act upon the extreme mispricing of real estate into 2006 bubble peak and sell short subprime mortgage derivative contracts was the belief among the majority of market participants that real estate would not collapse. His term to describe the widespread belief that at the time the real estate prices would continue to climb was the incredulity factor, and to use Krugman's own words, therein was the problem, namely the sheer scale of the mispricing that skeptics claimed to see. Even though there was clear evidence that the housing prices were out of line, it was hard to believe that they were that far out of line, that $6 trillion in real estate wealth would evaporate, that investors in mortgage-backed securities would lose around $1 trillion. It just didn't seem plausible that markets and the conventional wisdom saying that markets were okay would be that wrong, but they were. If you get a chance to read that article, I'll leave it up to you to decide if Krugman made the case between the real estate boom bust of 2006 and cryptos today. Instead, the light bulb that went off in my head when reading this piece concerned what else is silver. Now you see why this article gets so heavy and why it's so good. I was particularly taken with Krugman's use of the term incredulity factor to describe what blinded the majority's opinion about real estate back then and crypto today was the broad and innate belief that then current market prices wouldn't be that far off from whatever levels they were trading at, when the history of the market strongly suggests that yes, indeed, there are times when markets can be extremely mispriced. While it's true that Krugman was using two examples of markets that were or perceived to be overly or extremely overpriced, that doesn't automatically exclude the presence of the incredulity factor in extreme underpriced assets like silver. Simply put, silver's extremely low price over the past few decades has told in no uncertain terms the vast majority of the world's investors to just move along, that there is nothing to see here. It would defy credulity for the majority not to think that the persistent low price of silver wasn't due to ample or oversupplied market fundamentals. That's just normal collective investor behavior. But even a slightly more in-depth look at silver would result in the realization that the actual supply and demand fundamentals in silver are nowhere near as negative as the low price would suggest. So he's saying that silver's price is so low that there should be a massive oversupply. But if you look even a little bit into it, you could tell that's not the case. Something else is going on here. Then he goes on to say an even deeper review would raise more substantive questions concerning why, of all commodities, silver is still more than half of its non-inflation adjusted price highs of both $42 and 11 years ago. Adjusted for inflation, silver's low price is downright shocking. It doesn't make sense. It doesn't make sense. A reasonable person, when presented with silver's extreme undervaluation compared to its actual fundamentals, would conclude something's wrong. But according to the incredulity factor reference from Krugman, therein lies the problem, namely the vast majority of reasonable people are not even looking due to the deeply embedded collective sense that current market prices can't be that far off from where they should be. I've been asking more times than I could possibly recall why someone big hasn't bought silver apart from JP Morgan, and the answer is elementary. Because the persistent low price has signaled it's not worth the time to investigate. Now, I could actually beg to differ. I've covered a couple of different articles from billionaires that have been buying silver recently. But regardless, I get what he's saying. And it's funny because the one big whale that is buying silver, JP Morgan, is manipulating the price. So he goes on to say that complicating the issue in silver is that the reason most eyes and minds are closed when it comes to questioning the possibility that the persistent low price is that far off from where it should be is that the answer is particularly hard to accept. After living and breathing the intricacies of silver for close to 40 years, there's not the slightest doubt in my mind that the low price is a result of ongoing manipulation by certain large traders on the COMEX, like JP Morgan, the Dutch Bank, and Merrill Lynch. All have gotten caught. 3 of JP Morgan's employees got sent to prison. A fourth one for racketeering. Anyways, I've tried to document all along, and I've covered a lot of his articles talking about them spoofing, placing false buy orders on these exchanges, canceling the order before it goes through. I've come to accept most will never go that deep, but broad acceptance of my take is not required. Well, I go that deep, Ted Butler, and I appreciate that you do as well. If any market is extremely mispriced, as I contend that silver is to the downside, then it's only a matter of time before the mispricing must come to an end. And that's what I was talking about, where this article really gets interesting. Just like the housing's extreme overvaluation was rectified starting in 2006, so too will silver's extreme undervaluation be rectified ahead. The really important point here is that just like only a relative handful of market participants profited greatly from the housing bust by going against the majority who didn't comprehend the extent of the inevitable housing collapse, a similar circumstance is likely to be experienced in silver with a special twist. What twist do you think he means? Only the people that are sticking by silver's side right now, understanding it's undervalued, understanding its true value, will be the ones being rewarded. Those that profited mightily in the housing bust did so by dealing in high, esoteric, and complex mortgage derivative securities way beyond the capacity of regular investors to understand or have access to. To truly profit from the housing mortgage bust, one would have to deal in derivative contracts well beyond the reach of the average man in the street. In contrast, the beauty of capturing the coming radical upward adjustment in the price of silver is about it's as easy as falling off a log. In fact, there are almost too many really simple and good ways of buying silver to mention. No need to have to resort to anything complicated or esoteric. A bigger plus factor and advantage would be hard to find. Plus, it's physical. So as was vividly portrayed in the movie and book The Big Short, before real estate prices began their descent after 2006 and derivatives bets against housing began to pay off, many holders from the short derivatives bets were pressed up against the wall. struggling to maintain their short bets and having to meet increasing marginal calls to hold on to the positions. I know many silver investors, after so many years of waiting for the actual fundamentals to kick in and bring about the inevitable higher prices to come, must hold similar feelings as faced by the margin holders of what turned out to be the spectacularly profitable results for those that bet on the housing collapse. But here's the real beauty of buying and holding on to silver, as opposed to betting against the housing in 2006. There is no margin or leverage required. Sure, there are opportunities galore for those who want to up the ante by going on margin and deploying leverage when buying silver, but that is not required by those looking to take advantage of what I feel is the single best investment opportunity available. In fact, knowing the stresses associated with borrowing and utilizing leverage to most people, I strongly advise against buying silver on anything but cash on the barrel basis. Silver is going to explode in price to such an extreme extent that leverage is not required. All that it was required is an open mind and eyes. Ted Butler, June 9th, 2022, 2 days ago. He read this was 2 days ago. What an article. I love at the end how he really does explain silver stackers, what we're up against, why we're going against the grain is going to pay off, how it's so easy. I love how he said that this is the single best investment opportunity available. Silver makes the most sense out of anything, but above crypto, above gold, above anything. So yeah, I wanted to share that article. I think now you understand why I really wanted to share it, because when he compares what happened back then, or even going from the first editorial from the Big Short to the Big Scam, I mean, this article is critical to read, and I really wanted to share it with you guys. Hope you enjoyed it. Share it with your friends or anyone, because I do think people need to hear this and need to see this article to really restore their faith and just to validate what they're doing, which is investing into the best possible asset in the world, which is silver. I'm going to wrap this video up here. If you want to enter my giveaway and want a chance to win some of this beautiful silver, well, click the link in the description or the pinned comment. Thanks for tuning in. This is Silver Slayer. I'll see you guys soon. Peace.